Hey everyone, welcome back to the channel. Today we're diving into one of the most talked about stocks in the fintech world, and that is Sofi Technology, symbol SOFI, traded on the NASDAQ. You might have seen the headlines, the hype, and even had some hesitation around SoFi stock recently. They had just reported earnings. Earnings looked really good, yet the knee-jerk reaction by the market was to sell it off. We'll clarify what that was all about. So let's cut through the noise and take a look at what's really going on over at SoFi, including my one-year price target. And we'll answer the question, is SoFi a buy, sell, or a hold? Now, we're going to walk through first the history of SoFi, then we're going to touch upon the earnings report, which was recently released. We'll talk about the fundamentals and the quality of the stock as measured by Investors Business Daily. And we'll take a quick peek at some of the charts of their membership growth, revenue growth, and what business units are helping driving growth and which one may be showing a little bit of slowing. Now, SoFi has been shaking up the financial sector with its mission to make banking accessible and affordable to everyone. With all the innovations they're bringing to personal finance, we're seeing real potential here. But is it enough to keep investors confident? The question everyone's asking is, where will SoFi be this time next year? So let's talk a bit about the history of the company, a fun fact, and that fun fact being is that SoFi, the symbol, is short for social finance. Founded in August of 2011 by Mike Cagney, Dan Macklin, James Finnegan, and Ian Brady. They're headquartered in San Francisco, California. They do business in Latin America and, of course, the United States. Their current CEO is Anthony Noto. They have 3 business divisions, 1 being lending, 2 financial services, and 3 their technology platform. Now, the company has not been without its share of controversy and its run-ins with the government. In September of 2017, their current CEO and one of their founders, Mike Cagney, announced he would resign due to sexual harassment. Anthony Noto, who was the chief operating officer over at Twitter, came in as CEO in January of 2018. Then in 2018, the Federal Trade Commission and SoFi settled charges that the FTC had alleged that SoFi was making false claims about their savings that consumers would realize from using their student loan refinancing. Then in May 2024, SoFi was fined over $1 million for creating a cash management brokerage account system that allowed people to withdraw funds without any valid identification. In fact, they used stolen or fake identification. So concerns there, I would read into that as potential money laundering issues. And then in 2023, about a year ago now, SoFi announced that it was exiting the crypto business because of banking regulators that were stepping up their scrutiny on the company. This affected me personally. I had been dollar cost averaging into Bitcoin with SoFi, and I was advised that either I sell my Bitcoin or they would sell it for me. Now, I wasn't all that upset because it paid for my brand new driveway. And let's face it, this is what disruptors have to put up with. The big boys saw SoFi coming down the road and they wanted to throw hurdles up in front of them. And thus far, the company has been, by and large, been able to navigate these challenges. Now, looking at their recent earnings report, SoFi Technologies reported solid third-quarter earnings results thanks to a sharp increase in loan platform revenue, though the reliability of this in question. This is from Morningstar, and that's their opinion. Net revenue increased 30% from last year and 16% from last quarter to $697 million. Earnings per share increased to a nickel from a loss of 29 cents last year. That is a huge, huge year-over-year change. Now, Morningstar has a $13 price target on the stock. Moving on to the box in green. During the quarter, SoFi saw strong results from its financial services segment, with revenue increasing 102% from last year to $238.8 million. One of the largest drivers of this was a sharp increase in revenue from loan platform business, which jumped to $56 million in fee-based revenue, more than 500% of last year's results. We expected a strong result here thanks to SoFi's recent $2 billion agreement with Fortress Investment Group, but this exceeded our expectations substantially. Now, Morningstar goes on and they render a bit more opinion here. That said, it is unclear how reliable the growth will be in the long term, given the short-term boost from the Fortress deal. The company also saw a 211% year-over-year increase in interchange revenue, thanks to continued momentum in its deposit accounts and credit cards. And lastly, the box in blue. Despite the impressive performance of the financial services segment, net interest income, also known as acronym NIM, N-I-M, was the largest driver of growth, increasing 25% from last year and 4.5% from last quarter to $431 million. The increase in net interest income was entirely due to loan growth, as net interest margin decreased to 5.57% from 5.99% last year. We know this was coming with not just Sofi, but with all financial lending institutions, because the Federal Reserve cut rates by a half basis point, and they plan on continuing additional rate cuts in November. SoFi's net interest margin faces dual headwinds from falling interest rates and a shift in its asset mix towards lower yielding secured loans and investment securities. SoFi's strong deposit growth has historically provided a tailwind to margins, as the company replaced high-cost brokered deposits and external funding with cheaper retail deposits, but this has mostly run its course. Net, these are strong numbers. Morningstar has offered some opinion. Perhaps it's valid, perhaps it's not. What we care about are outcomes. And we're going to be moving on to some charts in a moment to support that the momentum is at the back of SoFi moving forward. Moving on to Investors Business Daily's rating of SoFi. It is number 2 in the finance consumer loan group. It has a composite rating of 94. That's very good, with 99 being the highest you can get. An earnings per share rating of 81. Relative strength, when they say relative strength, that's relative to the S&P 500. The group strength is a B, and an A under accumulation distribution rating is an A as well. So the sector is under accumulation and SoFi is under accumulation. And when they talk about accumulation, it's not mom and pop buying 100 shares of SoFi. It is financial institution accumulation. Now, continuing on with SoFi's fundamentals, we'll begin with the column on the right, highlighted in green. EPS change last quarter, 350%. Earnings per share percentage change current year, 134%. So solid growth here. Sales change, 30%. And this is what you really want to see, is the sales growth. EPS can be manipulated. Sales, very, very difficult. 3-year sales growth rate, 40%. Now moving on, this is what is going to get you the wild swings in SoFi stock. PE multiple, highlighted in red. This is a trailing multiple of 110. Now when you compare that with competitors such as PayPal, which is sporting a multiple of only 15, it can be discouraging. The however is that when you take a look at the earnings per share change last quarter on PayPal, they saw an increase of 22%. The however is that when you take a look at the EPS change on the year, current year, negative 10%. So clearly what you're paying for if you purchase the shares of SoFi is the premium for growth. Now the lower box, beta, for those folks not familiar with what beta is, that is the measure of volatility. Any reading above 1 is considered to be volatile. A beta above 2 is very volatile. To put things into context, using PayPal as a comparison, again, PayPal's beta is 1.13. So when you add up the multiple and the beta on SoFi stock, you need to expect a certain amount of volatility in the share price if you're holding this for a long-term investment. Now, this chart here is a really good illustration of their business and what business units are adding most to revenue growth. So in the bar chart, in orange, you have lending revenue. In purple, you have the technology platform revenue. In green, you have the financial services revenue. Beginning with the lending revenue, you could see that the lending revenue just continues to outstrip the other business units in terms of revenue growth. Financial services revenue, in green, saw a huge increase in Q3 of 24, and it's becoming a greater percentage of their revenue growth. Now, the only area that I saw an opportunity here was in their technology platform revenue, highlighted in purple. And you saw that begin to flatten out a little bit. And looking at the lines, in blue, we have total revenues, and in red, we have the membership change. And you can see now that the rate of change of members is now exceeding the rate of change on revenues. So if there is one area that I would focus on is what's caused that? What's caused I'm reluctant to say the decline in revenue growth for each new member, but I will. I'll ask the tough question. And I would like to see that answered for me. So I would need to do a little bit more research to get that question answered. Are they discounting product, etc.? So no real cause for alarm. Now moving on and continuing with the conversation about membership growth. Huge. I mean, this chart here is from Q1 of 2020 and consistent quarter over quarter membership change with 756,000 new members brought on in Q3, or a 35% year over year change. That is huge. So clearly, from what we're seeing here, and especially this past quarter, the company's firing on all cylinders. Moving on now to the technical analysis portion of SoFi stock, we're going to talk about two different topics. One is the behavior of the share price immediately following the announcement of its very good earnings report. Why did the shares go down? And how would you have known if you were a short-term day trader to get out? If you're an investor, you're going to hold it anyway, so it doesn't really matter. But I'll show you on the chart, if you were day trading it, how TrendSpider would have told you to get out. Now, speaking of TrendSpider, folks, unlock your trading edge with TrendSpider, please. TrendSpider is more than just a charting tool. It's your all-in-one platform designed to help you trade smarter and faster. And here are just a few of the features that you get with TrendSpider. Pattern recognition. We're going to talk about that in a moment. Automated technical analysis. Stop drawing by hand. You can stop drawing trend lines by hand. TrendSpider's advanced algorithms automatically detect trend lines, giving you accurate insights without the hassle. One of my favorite features is the multi-time frame analysis tool. You can analyze multiple time frames on a single chart. Spot long-term trend lines alongside short-term movements so you never miss a beat. You also get dynamic price alerts. I'll be setting up those alerts for you today to show you how easy it is. You can set these alerts on trend lines, indicators, or even your own custom criteria. TrendSpider monitors the market for you so you always are ready to jump on opportunities. Backtesting made simple. Test strategies against historical data in seconds. Many of them are already pre-made for you. Get real results before you ever risk money on a trade. The next feature is raindrop charts. This is completely exclusive to TrendSpider. You'll find it nowhere else. Raindrop charts combine price and volume in a single view, helping you uncover trends traditional candlesticks might miss. Also, you get a comprehensive market scanner. I use this all the time to identify great charts. You can screen stocks based on any technical criteria so you find the best setups that match your trading style. So if you're ready to level up your trading and discover how TrendSpider can bring precision and efficiency to your trading journey, use the link below if you're watching this on YouTube, or linked above if you're watching this on Twitter, and get a bare minimum 35% discount off of your membership to TrendSpider. Folks, I believe in it so much that I give it away free to our silver and gold level members to the Contrarian Trader. So take advantage of it today. Now, moving on to the charts of SoFi, we're going to talk about two sets. One is the 15-minute chart. We'll begin there, and we'll talk about the price action of SoFi immediately following the release of its earnings, and we'll talk about the functionality of TrendSpider that could have helped you if you wanted to stop out using pattern recognition and using raindrop charting to identify when it was a good risk to reward re-entry point where you stopped out, or if you were looking to initiate a new position on the pullback that SoFi provided you on earnings. The second chart will be a weekly chart, and we'll be talking about strategy. How do we want to either A, open a position, or B, add to a position? And finally, we'll leave off with my one-year price target for SoFi. So let's get started. So on the 29th, SoFi reported earnings, and what you saw here was a gap down. Again, this is a 15-minute chart. Now, TrendSpider has functionality you could use on a daily time frame, weekly time frame, quarterly time frame, called pattern recognition. Now, to use a 15-minute chart, you'd probably be a day trader. Most folks out there are not, so let's make the assumption that we're a day trader. We want to keep our losses small and look to re-enter at a more favorable risk-to-reward re-entry point. So we'll overlay the pattern recognition here, click of a button, and what you can see here is a head and shoulders setup. Left shoulder, head, right shoulder, and here you have a neckline. Your stop loss should have been placed right below that mark, and while yes, you would have been stopped out had you used a market order, you could have re-entered down here. Now, was there any indication that this could be a bottom for SoFi stock? The answer is yes. There were two of them. So we're going to take the chart patterns off. We're going to switch from candlestick charting to raindrop charting. Again, this is proprietary TrendSpider software. You'll never find this anywhere else. And you can see here this blue doji. This is gold. It's similar to a doji star formation, except this includes volume. The left side of the blue star doji is the first 15-minute price action. The right side is the second. The right side is the second half of the 15-minute bar. And all of these are the same when it comes down to halving up the time frame. If you're looking at a daily chart quickly, the left side represents the morning session, right side represents the afternoon session. Back to the 15-minute chart. So again, the blue star doji, that represents a sign of indecision, a tug of war, if you will, between bulls and bears. And you add that along with the fact that we hit support. I'm going to click this trends button, and you can see we hit a rising lower band of support on SoFi. So we bounced off of it, and then it was off to the races. So why did SoFi sell off? To answer that question, we need to go to the weekly chart. Now, these lines here, I did not draw. This is the algorithm. Click of a button. You could see that we had broken out of a descending wedge formation, very strong price action. So we rallied into earnings. People had made a lot of money. And at the time of earnings, it was a sell the news event. It's simple as that. It's not very complex whatsoever. Now, the bullish case here is the fact that while we traded down on earnings, they reversed it to close up off the lows of the session. Here's the daily chart. So while it closed down relative to the prior day's close, it closed well off the lows of the session. And by the way, here's a daily support level it bounced off of as well. So again, purely sell the news. That was it. Profit taking, don't read too much into it. Now, moving back to the weekly chart, let's talk about strategy. We'll bring back the candlestick charts. We'll take off the algorithm generated support and resistance levels, and I'll add my own annotations. So we're back to a weekly view, and you can see that last week they dropped SoFi again on earnings. It bounced off of critical support and reversed to close well off the lows of the week. So while yes, it's a down week, all down weeks are not made equal. What does that mean? Well, the intensity of the selling just wasn't there. In fact, you had buyers below willing to bid the shares up off the lows. Bullish, even though it closed down. Now, what I would like to see is not having a position at current in SoFi is a retracement back down to this $10 per share mark. And what we're going to do is we're going to start our strategy for SoFi right here, right now, getting ready for the new trading week. So I'm going to create this alert because I want to know if and when we retrace back down to support to begin bull operations. Now, all I care about, since I don't have a position, is a touch or a bounce off of that level. We'll keep a little bit of sensitivity, meaning it doesn't have to hit exactly $10 per share. Just has to come close by a dime or so. So that's good. Now, for those that are long of the stock, well, then you may want to consider setting up a stop loss. Then you would click this box here. But I'm going to take that off. So my alert is now set. So I'll be alerted when we pull back and we get a retest of what I know to be proven support on SoFi. When do I want to add more? Well, believe it or not, I want to pay more. And you may be saying, that's crazy. Why did you just buy it all right here, right now? I could do that. In longer term, it'll probably pay off. However, it's an undisciplined approach. I would rather see the stock earn the right for it to take up a greater percentage of my overall portfolio. How does it do that? Well, it's got to rally up to here, $11.72, and it must close above that mark. Why does this price point mean so much? Because the market sent me a signal back here, July the 31st, 2023. It acted as critical resistance. We saw a rejection at that point. So I'm fine with buying it at or near $10 per share. I don't want to buy more until we close above $11.72. Because what does that mean? Well, we've already begun to put in new higher lows, and we also have a new higher high. But this breakout above this pivot point, that would send us into new bull market territory. The trend will then be clear. It would be defined. We're now putting in higher lows and higher highs. Now take notice of this dashed line here, and we're getting to where I believe the stock is going to be 1 year from now. But short term, assuming that we close above $11.72, the next price point or resistance is going to be this rising upper band of resistance, which at current is at around $13 per share, in line with Morningstar's price target. However, this line is a movable target, right? It'll continue to move up higher as time goes by, but I do want to know as a trader when we hit that resistance level, because if it's far enough from my buy price, well then I may just want to book some profits, and we'll keep this active for quite a while. And here it is, simple. Sofi upper band weekly resistance hit. I can make a decision based upon the market's behavior as well as the share price behavior as to whether or not I want to remain long or do I want to book profits up and into that resistance level alert created. So where I think that we're going is up here, $13.60. I think that's the price target, my 1 year price target for Sofi. And why this price target? Because it represents resistance. Last seen from January of 22 through February of 22, this is going to become a major obstacle. And that price target is at around, let's call it $13.50 per share. We're going to create an alert there. We'll also keep this active for a very long period of time. I could add more days, but I don't own the stock right now, so no sense. Now, our alert is set when we do hit this price point. Now, I have a second price point that I believe that we could head to, assuming that we close above price target number 1, and that's here, $16.59 per share. Again, why is that number significant? It was because it acted as resistance back here, December 2021, then again, December 27th, 2021, and then in January 2022. So what was resistance is going to be resistance again. The question is, do we have enough bulls or rocket fuel to be able to break through that resistance level and, more importantly, close there? Now, we could use the seasonality function on TrendSpider to identify if we're heading into a favorable period of time, but there's only 4 years worth of data here, and that's insufficient for us to make a determination. So what we could do is overlay PayPal, which is a competitor, and see how it does. Typically, this only goes back 9 years, but still it's a healthy amount of data. It's usually up 50% of the times in November and 67% of the times in December. And we'll take a look at the banking ETF, XLF, see how it does. It's up, and this is 26 years worth of data, so a lot of data here. It's up 65% of the times in November and 64% of the times in December. So it's a favorable period of time. Would I overweight right here, right now? Probably not. I would do that around the June period, looking for a favorable July, lighten up into August and September, and reload in late September for a strong October, November, and December period. So that's the value of using seasonality. We have this on a monthly view, weekly view, daily view. To use the daily view, you'd want to go much shorter in time frame, say for a year. And you can see the XLF Friday is the best day for the ETF for the year so far. Now back to SoFi, we can also see insider trades as well as unusual option activity. So very, very powerful platform. Net, I am bullish on the stock. I think it goes higher, assuming that the overall market remains healthy. And in closing, folks, don't forget, take advantage of our 14-day free trial offer to the Contrarian Trader and get TrendSpider for free with our silver and gold level membership. If you're not ready, I completely understand. At least take advantage of the big discount that we provide to you by using that link below on YouTube, link above on Twitter. Head on over to TrendSpider. And don't forget that we go live 6 p.m. Eastern Standard Time every Sunday night and Thursday night to talk about the markets. Like, subscribe, you know the deal. Leave a comment below about what stock you'd like me to go over next week. And leave a comment. Do you agree or disagree with my analysis on SoFi? And I will get back to you. And I'm noticing here at the corner of my eye, Anthony Noto has been accumulating shares. He did so twice back in May and then again in June. So apparently, Anthony Noto, the CEO, is bullish on his company, which is consistent with our view of SoFi. We remain bullish. Have a profitable trading week.